Hey everyone, this is Kirk here again at Option Alpha. It is Wednesday, June 15th. Hard to believe we're already halfway through June, but that's what it is. So we had a pretty busy last couple days getting off of last week. The markets have been pretty volatile. I mean, we had a day down and then we had a huge day up, and we thought things were going to turn around, and now we have come full circle all the way back around again. Another down day. And then also, of course, we had Pandora's IPO today, which priced out the shares at 16. They opened at 20, rallied as high as I think 25, and then really just were a dud. I mean, I think they closed under 18. Just pretty actually pathetic for an IPO the first day. So. And obviously, LinkedIn hasn't been as well either. That IPO opened around 80 and is now trading much lower than that. So what I wanted to get to first tonight on the video and going over just a bunch of different things on the charts, obviously, is first the dollar, and that's what I have up on my screen here. And you can see that the dollar has really been running into this resistance area that I've talked about for months. And you can go back to other videos and look at these levels, but I've highlighted this level a couple times here on the dollar index, this 54 level. And I knew that's exactly where the dollar would stop, and that's where it did. It just came right back up from here. That's where the target we had. And then on the way down, I had already talked about this declining trend line, that it had broken out of this trend line. It was very, very normal for these types of moves in the market using technical analysis for the move or the stock, security, whatever it is, to break out higher, come back down lower, and make a retracement on that trend line. Now you can see that actually the retracement on that trend line is actually a little bit higher, and that's really positive, and that could have been a really good buy signal right there. The retracement didn't come all the way back down and break the lows of the dollar index, it just came back down, and now we have a higher low and really a new trend starting. So now from here, we've obviously had a really good day in the dollar, really positive day, up almost 2%. I think we're coming right back into this area, maybe a day or two here, but I think that we're going to blow right past this area. So I think that the next move and the next kind of target for the dollar is obviously going to be this next Fibonacci line up here, right around 56, which also correlates with all of these highs and lows, support and resistance lines in the past. So very easy target to spot on the dollar. With regard to the VIX had another really good move today. Finally broke out of this congestion down here, and that's what I think it is. I think it's mostly congestion. We've seen the market obviously down almost 6 weeks, and the VIX really didn't move anywhere. It was still under 20 for the most part, all during that time period. So we had a lot of uncertainty in the market over the last 6 weeks and moving lower, but it seemed that the VIX didn't do anything, and that was really frightening a lot of people, myself included. I mean, you have the market that's going down, the VIX usually goes up. Where's the disconnect, right? So what we have finally is the VIX breaking out of this range. So I'm not sure how high it's going to go. I mean, it could obviously touch the 25 type range. I doubt if it's going to hit up to 30, at least at this point. I think that that's pretty much a far stretch unless something crazy happens. But I think that 25 might be really reasonable for just a little touch intraday and then come back down. So I do think that we're getting close to some sort of at least short-term bottom in the markets, and I'll use the RUT as my example here. But I really think that the RUT and a lot of the other markets are getting close to a short-term bottom. We've seen a lot of selling pressure, and it started to slow. And that's the key here, is that the selling pressure was pretty continuous for the last couple weeks, just moving down. But it started to really slow down, and that I think is the real key point here, is that the pressure to the downside, or the rate at which the market is falling, has slowed down. And then, of course, as members know, I've also shared a couple charts with them inside the members area with regard to sentiment and money flow and things like that. So a lot of things are kind of pointing in the opposite direction right now. And you guys know I'm usually pretty bearish on the markets, and I'll be the first to say I'm pretty bearish on the markets and have been for a while up at the top here. But I think that market tops generally take longer to form, so I don't think that we're going to have a major, kind of downside break, or at least I hope we don't. But I think that we're definitely going to see a retracement type rally in the markets going forward. If you actually look at the a picture of the Dow, and I'll have to adjust my screen, and this is something that I had brought up a couple times on another videos, that what I'm looking at with the Dow is a very similar type move to what it did in the top of the market in 2007, 2008, where it had a nice bouncing along the trend line, a break of this trend line, but only briefly, a break of this major long-term trend line. Then it came all the way back up. You see, it came all the way back up and retraced into that red zone up here. Now we fast forward all the way forward and we have virtually the same type of thing going on. Again, long trend. Finally, a break of this trend line, possibly brief, and then it's going to come back up and make a bullish trap play, or at least that's my opinion on it, back up near 12,500. As soon as we get up around 12,500, you're going to get a lot of people who are coming into the market thinking that things are really good. You know, the bulls are back on track. Everything's really good. Greece, Europe, all that stuff doesn't really matter. The debt ceiling. And that's what really traps people in. No different than what happened back in 2007, 2008, right? Subprime, it's a small part of the economy. It's not really that big deal. You know, we've already discounted it. And look how wrong they ended up being on that front. So don't, you know, fall into that trap that everything is hunky-dory when we start getting back up above 12,500. But for the meantime, I mean, use this as a good opportunity. I know that I've talked to members a lot of time and a lot of coaching students about using this high VIX opportunity and selling market to play the market to the lower side and sell really expensive options right now and play the upside move, or sell credit spreads, or do a lot of different things that you can play the upside move here, and it's still protecting yourself to the downside. I know you can get 15% or more away from the market even at these levels and still capture really great premium. So as always, I hope you guys enjoy this video. Please add your comments to this video. It's always helpful and important to hear what you guys think and what you see out there, and any suggestions or ideas that you might have that you want me to cover. I always appreciate you guys' comments on these videos, and happy trading.